In the energy quadrant, EIA today released both the crude and the natural gas storage report. The crude report had a build of over 5 million barrels, which kept crude kind of stable, but the story really is natural gas today, down over 3.5%, erasing all of yesterday's gains. If you remember, yesterday was a very strong day, up over 4% on the highs. When we got down to the lows in natural gas today, we erased all of those gains. We did get back above the open of yesterday, so on the close we didn't erase it all, but on the lows we did. So essentially, as we talked about yesterday, there was some pretty key significant resistance in natural gas it had to get through, and it failed today at those levels. As I mentioned, EIA was released, and it was a larger than expected draw for natural gas, 161 billion cubic feet versus market expectations of a draw of 153 billion cubic feet. And the 5-year average for this time of year is only a draw of 101 billion cubic feet. But the next week's expected draw is looking to be very, very light, and that did not cause natural gas to hold any of the gains we saw yesterday. That particular draw that we saw, that 161, was not big enough to erase what's expected to be much lighter draws in the coming weeks due to some of the warmer weather. And the weather demand forecast still hasn't changed. It's still looking to be low, not even low to moderate, but low over the coming 5 to 10 days. Even though we have a storm that went up through California, causing rain and snow, but not causing any excess cold, going up into the Dakotas and possibly into Minnesota, potentially blizzard conditions expected in Minnesota, but still not enough to offset the high pressure system for the rest of the lower states below that sort of northern plains region. They're expected to be warm enough to not spike demand at all. So demand still expected to be in that very low range for this time of year.